Welcome, gentlemen. You've got water just down by the sides of your sofas, and you should all have microphones on your chairs if you're wondering what that was you were sitting on. Before we begin, I just want to take 2 minutes, because we haven't got a huge amount of time. In fact, you can see how much time we've got there. Just to introduce yourselves, tell us about yourselves, and about your banks. Let's start with you, Max.
My name is Maximilian. I was actually Austrian. I founded N26 in 2013. N26 is a classical venture-funded fintech startup based in Berlin. Classical fintech startup with one exception. We got our own banking license, which is still quite rare in the space. The vision behind N26 has always been to build a pan-European retail bank. It is extremely fragmented market, fragmented in a way that you have like German banks for German customers, French banks for French customers, and so on. And N26 is the only ones that, based on one IT platform and one banking license, onboards customers all over Europe. Having said that, the vision has become bigger as we realize that the banking needs throughout the whole Western world are very much alike. Today, we are working towards building the first global bank in retail.
David?
Hi, my name is David Vélez. I'm the founder and CEO of Nubank. We are a mobile-first digital bank in Brazil. We started in 2013, so we've been around for about 5 years. Have grown significantly. Today we are the 5th largest credit card issuer in Brazil. We're about 6 million customers. And over the past 12 months, we also got a banking license in Brazil and launched a debit account, current account, and a few number of our products, building the full-fledged digital bank focused on consumers in Brazil.
Oliver?
Hi, it's great to be here. Thank you. So we're Tinkoff, almost 12 years old, so we're a bit further down the curve than maybe some of our, let's say, younger colleagues in inverted commas. We started as a credit card company in Russia 12 years ago. And then we went through several pivots as we adapted over time, and we made what you could call a transition into a full-service retail player. So we now have 8 million customers, all in Russia, half are transactional customers, half are borrowers. And we've gone into other services. So we're completely branchless, digital acquisition, all the stuff you'd expect to see from a financial technology player. But we've gone further beyond finance. So we built what we call the financial ecosystem, and we offer lifestyle banking solutions through our mobile app. It's a leading mobile solution in Russia. So we have not just all the financial services, the payments, the borrowing products that you'd expect to see, but also you can buy tickets, you can order a taxi, you can book a restaurant, you can buy travel services, book a hotel, and do all sorts of other stuff in terms of content that we generate in our mobile app to drive DAO and MAU. DAO is currently 1 million, MAU is 3 million, and we'll probably be doubling that this year. So it's going very well. Just to very quickly wrap up, we're a bit different as well in that we make money. We had to, because there isn't that much capital around in Russia, as you can imagine, given the circumstances these days. So we made over $400 million net income last year off $2 billion worth of revenue with an ROE of over 70%.
Okay, well, we'll come back to that in a minute. Thanks for that introduction, guys. Just very, very quickly, Tinkoff is actually, of course, listed on the London Stock Exchange, but how much have you raised and what's your valuation?
So we probably raised through a few rounds before the IPO around $200 million one way or another, and our current valuation is just shy of $3.5 billion, a bit depressed because of the geopolitical situation.
Well, we'll come to that later. David, your fundraising and valuation?
We've raised to date about $450 million in equity, and we don't disclose particular valuation, but our last round was said to be at a $4 billion valuation.
Okay, and Max?
We just recently announced our Series D funding round. We raised a bit more than 500 million USD, and the latest valuation we announced was 2.7 billion.
Okay, now these are huge numbers that we're talking about by anyone's estimates, and we have not even mentioned the likes of Revolut or Monzo or Starling Bank or the other kind of herd of digital banks. I suppose this one is more for David and Max. Are you just giving kind of customers a free lunch at the expense of investors, David?
Not really. A bit of a difference in our model is similar to Tinkoff, and we actually got very much inspired by Tinkoff initially. We started with a credit card product first, not with a debit card. And what's great about credit card is you have a real business model since the very beginning. It has very good unit economics, generates revenue. It's a harder business to begin because you have obviously credit risk. If you get credit wrong, you're dead in a few weeks. You have funding requirements. It's a really complicated, it was extremely hard for us to figure out how to fund the business, starting from scratch in Brazil with no data, while Brazil went into the worst economic crisis in 100 years. But credit card as it stands is a good standalone business. We generated cash since 2017. We generated cash in 2018. So the business is pretty much self-funded today. And now a lot of that, the generation, we are reinvesting into a business, into growing new products. So where we start today is a very solid financial place.
Okay, Max?
Yeah, for us, we're definitely not in the business to distribute dividends to our investors. We want to build like a global bank, and that means you have to invest first. In the first 1.5 years after launch, no one at N26 had a single monetary KPI. We were working on winning the trust of the customers, getting our own bank license, launching new features, launching new products. But we always believed if you enlighten the customer, and if you have like 1 million customers or 5 million or 10 million customers, and they use N26 and they trust you, that at one point in time you will also be able to monetize these customers. But for us, it's just important to monetize them in a fair and transparent way.
And when does that point in time come? I mean, have they said, right, you've got 5 years to kind of, pay this back, or what kind of timeline do you think you've got before you have to start showing them the money?
It's a little bit what David said. I think there's different inflection points. Like at the beginning, we launched with a free current account, and we didn't have a bunch of revenues, so we had highly negative unit economics. I think the first big milestone was that unit economics became positive. So until, say, 2 years ago, every customer we added to the platform was making the company more negative. Today, every customer we're adding is making the company less negative. But we are still, every euro in cash flow we're earning, we are reinvesting in building up the team, in marketing and growth. So I think next step is really to fund also entirely the team, and at one point in time, obviously, you have to build a sustainable business model, which also means that you have to cover all your variable and all your fixed costs by the revenues you make.
Okay, and I mean, Oliver, we left you out of that one because, of course, you're making money already. I mean, is your model, David said that they were partly inspired by what you're doing. Is your model something that can and perhaps should be replicated in Europe and the United States and other developed markets where perhaps they haven't been around for as long and they've yet to start generating profits?
Sure. Well, thank you to Dave for that. We spent quite a lot of time together a few years ago. So basically, every single company has its karma. It has its own development path. And I hear a lot about overinflated valuations and all the rest of it. But investors are not stupid. These are some pretty big guys. When we're talking about Accel, we're talking about Tencent, we're talking about lots of other very well-known investors. They know exactly what they're doing. Yeah, there's hype, okay, but they are investing money, expecting high multiples on the high growth and high profitability that will come at some point. So I think that's missing the point a little bit, really. It's more about the viable business model and the unit economics that these investors are seeing. So really the question is about how do you have positive economics, unit economics, and how then do you scale? So the question mark for me is not really whether you're a consumer lender-led in terms of strategy company, as Tinkoff was, as Nubank is, or whether you're a liabilities-led company or mobile first. It's not about that. It's about how you scale, because when you've got 100,000 customers, 1 million customers, it's easy. When you get into 5 million customer territory, each incremental customer costs more and more money at the same time as you've got customers churning. And so it's more and more difficult to grow and becomes more expensive. So your NPV numbers are a lot more challenging. How do you make money? I hear a lot about marketplaces. In our experience, marketplaces are difficult to scale. You can't make money on them. So I think everybody's going to go into lending. That's my
Would
point.
you concur, David, lending is the way forward if you want to really get the margins and start making serious money?
Yeah, no, absolutely. I think lending, for us, either credit card or any other lending business, ultimately a lot of these digital native or challenger banks businesses will be monetized through a combination of lending or cross-sell of different type of products. The big challenge is lending itself has a different type of DNA. Lending is not the traditional technology, move fast and break things, that we're used to seeing in the tech side versus the fin side. And so for fintech, you have to figure out how to coexist with effectively two type of mindsets. One is the technology, one that is very much aggressive and forward-facing and wants to move fast. The lending business, you simply cannot go that fast. You have to wait. You need time. You need your models to evolve. If you go too fast, your business blows up. And so for us, it has been an interesting challenge to figure out those type of mindsets, those type of DNAs. And I think what the challenge might be for a lot of the more the traditional technology businesses eventually expecting to monetize via lending is they'll have to develop that credit DNA, which is not easy. So
you could develop it, but of course you could also acquire it or merge with it.
You could also acquire, you could also merge it if you really understand that it's a different type of beast, and you have to take it. You have to be a little bit careful when you deal with that.
Okay. And Max, you think lending's the way forward eventually?
Well, thinking about monetization, and I think it's definitely a fair question, like to ask a challenger bank that's like still operating perhaps negatively. I think first of all, you have to look at the cost side. Like if you think about monetization, I think what's very important is like I think most of us, all of us, are operating at a very different cost base compared to traditional banks. Like one, we have like much lower IT costs because we are technology companies by genetics, like very different to the traditional banks. Two, we acquire customers much cheaper, like at a small fraction of the price compared to traditional banks. Why? Because we are like really working on like we are very customer centric. We are really working on lightening the customer. Like three, obviously also we are operating on different overhead costs. Like I don't know how it looks like in your offices, but walking through N26 looks very different than walking through the board rooms of like some traditional bank. Plus, I think lending is only one stream for us, and like contrary to the traditional banks, we don't believe in building up the biggest balance sheets. Like traditionally, banking business very much driven by the balance sheets. We are definitely trying also to build up origination power, but also like build up revenues in other dimensions. But in the end, it's definitely not N26 that are building up the balance sheet themselves. It's also not really working. We're not specialists like in building up balance sheets, and we also don't believe in using venture capital. We just mentioned that obviously those guys expect like high multiples. We don't believe in using venture capital as a regulatory equity for building up a big loan book ourselves.
Okay, and just very quickly, N26, you claim to be the fastest growing mobile bank in the world, right? Is that based on customers?
That's based on customers, yes.
Okay, and David, you say that you're the largest digital bank outside of Asia. That's also based on customers, is that
Yes.
right? Okay, and you guys, Tinkoff, you're the world's largest online-only bank. That's based on profits.
Standalone online-only bank.
Right,
8 million
okay.
customers. No, it's the biggest in terms of customer numbers.
Okay, so perhaps we'll fight this one out kind of another time. But
You picked well here.
they're all the biggest. Just remember that. You're all planning to grow much bigger, as we know. The question is simply this: is the world big enough, not just for you guys, but for all the guys out there? I mean, when there's been kind of a digital bankageddon or something, do you really believe that? How many do you believe are going to be left standing? And how confident are you that you're going to be among those? Oliver, why don't you start?
Sure. So we've been through Armageddon twice in our short history of 11, 12 years. We had the global financial crisis, so we broke even within a year and a half of the launch of our operations. It was a question of survival, which is why we're always about the bottom line. And that kind of makes us a little bit, maybe more of a black sheep in many cases when you talk about the fintech world. Then we had the second crisis, which is the Russian crisis, 2014, 2015. So we've been through the fire. We know what it looks like. We know how to deploy our significant operating leverage that Max was talking about that fintech players have, because we have very high variable cost and low fixed cost. It's part of the beauty of our model. You can grow quickly, ramp up quickly, but then collapse very quickly when you need to, and batten down the hatches until the storm's gone by. But it will sort out the wheat from the chaff. We'll understand who has really got the positive unit economics and who knows how to run the business.
David?
Yeah, some of the math that we've seen from our investors is that there is about $10 trillion of banking market cap in the world. And if you see what technology companies have been able to take away in other verticals, if you see in retail what Amazon and online digital first have been able to take from the offline. If you see in transportation, businesses like Uber and what they've been able to take away from traditional taxi drivers. When you see at media companies like Netflix, you can make some math there, and there is about, some of the estimation is there is about 10% of that $10 trillion market cap that could be taken away by digital banks. So you have about $1 trillion of market cap that could be generated or could be taken away by the digital first fintechs. That is a combination of taking market share away as well as reaching out to consumers that have no access to banking services. So in Latin America, about 200 million customers have no bank accounts. The same thing happens in Africa and a lot of emerging markets. So there is a ton of market cap to be created by the new digital banks, and there's space for a Tinkoff and from a number 26 and for a Nubank and for many other ones. Just because in banking necessarily there's not a great argument for a winner-takes-all type of proposition. It's not necessarily a marketplace. There are not necessarily network effects. And so a lot of the banking businesses tend to be very local businesses, and therefore it's hard to believe or hard to see why would you see one main winner-takes-all type of bank globally taking over that. And it's a very large market, so in my view, there's plenty of space for multiple players.
Plenty of room for everyone, Max?
Yeah, absolutely. Like, fully agree. It's not a winner-takes-it-all like a proposition. When we launched in the banking space, we believed, and I still believe that's true today, that financial services is an area of tremendous opportunity. I believe financial services is the area most ready for disruption. Why is it like this? One, there is a massive shift in user behavior. It's like a shift from offline. People used to go to the bank branch to online. People did banking on the browser to mobile. People to banking on the smartphone. And if you look at many other industries that have already been disrupted by the internet, by new technologies, you actually see that disruption was never coming from the inside of the industry. It was never been driven by the incumbents. It wasn't Blockbuster that founded Netflix. It wasn't the record labels that founded Spotify. It wasn't the telecommunication companies that founded Skype. It wasn't the big travel agencies that founded Booking, and so on and so on. And I don't think it will be the big traditional banks that really change the way people do banking. So I think there is a tremendous opportunity for startups, and I think we also don't see each other like as competition. Like for me, and I guess also for the gentleman here, it's about building a bank with 100 million customers, and that means I have to win like 4 million customers from HSBC and perhaps 3 million customers from Deutsche Bank, and I shouldn't be so much concerned that there's another challenger who is obviously also tapping the same sources.
Well, I'm interested that you say that you don't see yourselves as competition, because of course right now you're not competition. Your N26 is Europe and now coming to America. David, you're exclusively focused on Brazil and no plans to change that in the short term at least. Oliver, you're 100% focused on Russia and no plans to change that in the first place anytime soon. Do you guys think that eventually you will be in the same markets and competing with one another? Oliver?
It's possible, never say never, but right now there's so much to do in Russia, and this is said without hint of irony. Russia is a fantastic market if you've got the right business model and you can challenge the incumbents, as Max has just been explaining. So there's loads to do, and we don't want to get distracted, we don't want to dilute management bandwidth. But I genuinely believe that we're going to see encroachment from big tech. I know it's been a bit overblown recently, but I genuinely think that some of the guys, and you can see this from the local equivalents of big tech in Russia, so Yandex, Mail.ru, who are moving into financial services. You see this in India. Obviously, it's happened in China from the Chinese big tech. I think this is going to come. So the banks are already toast because they don't understand. They just don't get it. The old banks, I mean. The new players get it, but maybe we're not big enough and we have to scale up and build ecosystem effects. This is the network effect, which I genuinely believe you can actually create. Because at some point we're going to get a bit of a fight.
Oh, that should be fun. Max?
Yeah, we have started to articulate some time ago that our vision, I also said it today, is to build a global bank. In terms of building a global retail bank, you don't have to go to the 194 countries on this planet, but if you capture the European Union, if you capture the US, and perhaps like 8 or 9 other markets, you capture more than 80% of the worldwide revenue potential.
So Latin America and Russia are on your kind of
some of
target list?
these, like 8 countries, happen to be like some of the countries those gentlemen.
So
Bring
yes.
it on.
Okay, and David?
Yeah, I mean, I think similar
You
to...
better grab Latin America before they come.
Yeah, similar to Oliver, I think maybe at some point there is definitely competition. The way we think about it is there is a very long. We have a very long-term view about our growth prospects. We're building a company for the next 20 years or 30 years or 40 years, and so if you have that type of long-term orientation, and you realize that first mover advantage is not necessarily win. You see somebody like Amazon, it took them 25 years to get to India, but once they get in, they win, and they were able to win their first market. That's, I think, a bit the way we think about it. We do a few things very, very, very well. In 5 years, we've done 2 products. We've not done 10 or 20, but with those 2 products, we've been able to get to a very sizable size. And so we'll do a few geographies, we'll do a few products, but everything we'll do well. And eventually we might go to other countries, but we'll be very, very solid and we'll be very strong once we do that.
Okay, now Max and David, you've also got something else in common, which is a rather big investor in the form of Tencent, right? So Tencent, you put in $180 million into Nubank. And how much of that 160 million was Tencent that went into N26? Can you?
I don't think we announced the split, and I would
Well,
I would have to do the math actually. But they definitely led our Series C funding round, and they significantly contributed to the Series D.
Does Tencent kind of have it in mind that eventually you guys might do something together? I mean, it would be silly to have you competing, wouldn't it?
Well, I think Tencent, and I think you have to give a little bit of a longer answer there. Like Tencent is
a quick answer.
Yeah. Tencent is a very strong player in China, and in terms of like building a payment system, this is actually quite like difficult to launch into new markets because people are very are very much bound by their habits. I think what Tencent and N26 have in common, they really believe in like high frequency usage of the customers. Like to give you like a feeling about Tencent, 1.2 billion customers, 600 million daily actives, and like those people spend like 90 minutes every day in the app. It's a similar concept to WhatsApp. Like it's the one app we open like 10 times every day. With WhatsApp, I always found it surprising how little actually they monetize me. I think I once paid like €1 for the desktop version. Like Tencent actually managed to build a really defensible ecosystem around that. So they have something like Spotify, but with 700 million users, biggest gaming company. And if I would like to pay you money, I would actually use Tencent. I think the strategy of Tencent is they are very reluctant, I think, to expand to other markets like Europe with the payment system. So if they do it, they just do it like in the niche of Chinese tourists. But I think they believe in supporting like what they say global winners around the globe in
right,
their
but my point is that it wouldn't make sense for them to put lots of money into N26 and lots of money into Nubank and then have you guys competing against each other and spending lots of money in the process, would it? So do you think that their long-term view is to have some kind of collaboration between you guys? If you've got Europe and America and then Latin America, that would be a nice part of the world to have together, wouldn't it? David?
I think the way they see it so far is they want to be investing in the leaders globally. And I think they did around 150 investments last year, so it's totally possible that some of them will compete at a certain time. I don't think they will have necessarily a strong point of view about who will compete or what. They're more approaching the opportunity more about who are the leaders in different spaces, and they're trying to invest their money and their strategy in their time because they do become strategic investors in different ways. So I think that's the way they think about it.
Okay. Oliver, so I want to ask now about governments because kind of escaped many people's attention that the Russian government isn't everyone's flavor of the month outside of Russia, that there are issues, whether it's taking out dissidents in the UK, whether it's invading Crimea, what have you. How much does the kind of Russian political situation internally and externally affect you and your plans for the future?
Sure, so I said that Russia is a fantastic market to be in, and it really is. Because it's a very online population. It's the largest online population in Europe. There are barriers. So, for example, we don't have people chucking private equity or VC money at us, as I mentioned earlier. So we've had to live a hand-to-mouth existence and turn a profit as quickly as possible in order to fund ourselves. But there are lots of things which are not immediately apparent to the outside. So it's a protected market, maybe not necessarily by design, but it means you don't get the big tech players coming into the market. We have our local tech guys. It's got the best programmers in the world. The talent pool is absolutely amazing. The human capital is amazing. And so we have basically 2,000 developers and other tech professionals building Tinkoff. We don't have to buy anything from outside of me. We have a fantastic regulatory environment, which doesn't necessarily sound intuitive, but it's true, with a very progressive central bank who've launched all sorts of initiatives, including as late as yesterday, a faster payments equivalent in Russia, telephone, mobile payments. So we've got lots going on. And although the political situation, the geopolitical situation, I should be very precise about my words there, affects our capitalization, our market cap is a little bit depressed, so we're trading at 7-8 multiples in terms of PE because of the geopolitical situation. It'll calm down, investors will come back, it's just a point in time. That aside, Russia's a super place to do business.
Okay. David, you've got a new government in Brazil as well. Do you get a sense that this is putting aside, if we can for the moment, other controversies, let's call them, regarding the current Brazilian government? From a business perspective, someone running a startup in Brazil, this is presumably a pretty good environment for you right now.
Yeah, absolutely. Everything we've seen so far has been very positive towards startups, especially in financial services, towards increasing competition in financial services. In Brazil, you have 5 banks that have about 90% market share in insurance, in credit cards, in deposits, in lending. It's one of the most concentrated banking markets in the world. And as a result, you have one of the highest spreads, banking spreads in the world. You have one of the lowest consumer satisfaction indexes in the world. So the past administration and this new administration, they both have been very consistent in that more competition is good for consumers. They really want to increase access to banking. And all we're seeing from this new government is they want to do it more and they want to take it harder and they really want to go through all the do all the reforms that the country needs to do to open up a little bit.
And Max, I'm going to ask you the B question. Brexit, is that worry you at all? Of course, you kind of went, was it last year you moved into the UK or a couple of years ago? Does this affect your outlook? Kind of government's political issues going on in the UK?
Well, if you ask me personally what I think about Brexit, I think probably like most people in this room would agree. For us, it's a big mess. Obviously, like it reduces like the common market. It incredibly increases like the difficulty to do business in that country. But you know, we bring a banking service to the people, and we think our product like what does the customer request, what do they need, and then we build a setup around it that's required. And that didn't involve a bank license in the UK until recently. If like no one knows how hard the Brexit is going to be when it comes to bank licenses.
Will you need it? Will you need a new UK banking license?
No one knows how hard the Brexit is going to be when it comes to bank licenses. No one knows a lot actually yet. But if a bank license is required, we will get our own license.
And I'll hopefully give you a couple of weeks' notice or something. And just finally, we've only got a minute left. So there are obviously things happening globally. There's, I think, the IMF, and we'll be hearing, of course, from Christine Lagarde very shortly, downgraded its growth forecasts already this year. There's talk about a global recession. Of course, we've got trade war between the US and China and the like. Very quickly, you've got 20 seconds each. Oliver, we can start with you. Does the global outlook, do you think there's going to be a recession, and are you ready for it?
I never answer the question, do I think there's going to be a recession, because who knows? All sorts of things can happen, but if there is, it's a fantastic time. So there are good times when the sun's shining and business models, good business models, which are well executed, like Tinkoff's and colleagues here on the panel, they kick in. But when the downtime comes, it's a great time for a clean out, and that really sorts out the wheat from the chaff. I like it.
David, good time for a clean out?
Same, hard to see a future, but for us, we come from a history of 8% GDP contraction since we launched. So it was absolutely the worst moment ever to launch a lending business in Brazil. So for us, it can only be good from now on.
Max?
Yeah. Same. I don't think we are operating in in the cyclical industry. Obviously, like recession would affect the capabilities to raise funds significantly, but we're quite relaxed as we're just coming like out of closing our funding round. I think we should get prepared to live on that money a little bit longer than last time.
Okay, great. So look, guys, that's all we've got time for. Thank you very much to our panelists, David Vélez, Max Tayenthal, and Oliver Hughes.